Chris, very good to see you. We are myth busting today. We have the 4 biggest financial myths and the truth behind them. Some of the most common beliefs about money, retirement, and investing are simply myths, and believing in them can really hurt your financial future. So here are the top 4. Number 1, the market always goes up. How do you help clients stay realistic about market cycles while staying invested for the long term?
Sure, and it's really important to build a portfolio that's set up around their risk tolerance. So doing
Right.
our due diligence, and the market, historically over time has certainly gone up substantially, and there are times when it goes on a very big bull market run, like on the slide here from the bottom of the 2008 financial crisis up to COVID. That was an unbelievable run, but you can see those sharp drop offs. And so when you develop a portfolio for people in retirement, they're typically taking a more conservative approach. And then, we help them bring in real safe money strategies so that when the market does go down, we can shift and go to plan B or plan A in a lot of cases anyway, and to help mitigate that downside risk and keep their emotions in check.
Yeah, that's a tough one to do. All right, myth number 2, the 4% rule for retirement withdrawals. Is that rule still reliable? Is there one number that is?
And it depends on the individual client. That's a great question, Erin. And the 4% rule came out of a financial advisor's office out in California in the early 1990s when the stock market was red hot. Remember, the internet was just getting started and all those companies were running up. So the 4% rule is a rule of thumb, not something that's etched in stone. So we like to, help clients build income portfolios using dividends and notes that we get through our partners at Brookstone. But we don't say that the 4% rule is set in stone, because when interest rates are near zero, boy, it's certainly hard to, have a lot of confidence in that. Now that rates have come up, it's certainly easier to build some income portfolios, but as interest rates go up, so does inflation. So sometimes that 4% withdrawal rate has to increase with inflation, and that's where you need an expert like us to help you with that flexibility.
Yeah, certainly a moving target. Myth number 3, my taxes will be lower in retirement. Why might retirees end up paying more than they were expecting?
Sure, when they hit that age of 73, they have those required minimum distributions that kick in, and it may make their Medicare premiums more expensive. It's going to make their Social Security tax or Social Security income also taxable, and so there are a number of pitfalls that might trip people up in retirement. And if you make $200,000 while you're working, and in retirement you only need $50,000 of income, right, your taxes will most likely be a little bit lower. But that's where we take advantage of that and help people plan for if my taxes are lower in retirement, or if they're going to be higher because of some of the pitfalls from required minimum distributions and other investment income that they may have coming in. So we help them mitigate that passive income, if you will.
Myth number 4, I don't need life insurance once I retire. Why might someone need life insurance in retirement?
Sure. We live out here in farmland here in the Midwest. And if mom and dad have a family farm, and let's just say the son wants to take over that farm, but the daughter doesn't want anything to do with it, they may get a life insurance policy that when they pass away, the son gets the farm and the daughter gets the cash value of the life insurance. So it's a good way to help equalize the estate. And then today, more of our more modern life insurance policies also have the ability to access a death benefit on a monthly basis to help pay for long-term care needs, such as assisted living or even home care or in a skilled nursing facility. So, life insurance is much more than just somebody passing away. And that's why they call it life insurance, not death insurance.
Right. It's interesting. I'm really glad we got to talk through these myths, a lot of misconceptions behind them. Chris, if somebody would like to sit down with you to create a financial plan to make sure that they are well taken care of in their retirement, what's the best way to reach you?
Yeah, I'd have them contact Heidi at the office at 866-695-2620, 866-695-2620, or they can go to the website there, McIntireRetirementServices.com.
Great. Chris, thank you.
My pleasure, and thank you.
Tune into Chris McIntire's full radio program and visit McIntireRetirementServices.com for many additional valuable resources, including other great episodes of Game Plan for Retirement with Chris McIntire. Be sure to subscribe.